Welcome, everyone. This is Brandon Chapman. And Blake Young is with me today. This is our cast for the morning Theo Live, Theo Live show. It's good to have you. We got a full docket today. We're talking volatility. We're talking what is it? Jackson Hole. There is the Fed heads across the world looking at the Tetons.
That
Blake,
wasn't staged at all, was it?
yeah, I know. It's
Go
like,
and point
oh, look at
out
these
into the distance.
mountains.
Oh, look out
Behold.
there. We're humans. I too am a human.
They're looking for places to put their faces, right? So it's just look at the mountain and say,
Oh,
hey, Lagarde's like, I got this, Powell's got, I got that, but the reality is we know that central planning, central banking doesn't really work for everybody. And so again, there's risks of inflation, other things, but the big jobs report, the jobs revisions that came out. So a lot of stuff kind of stewing as the market is testing highs here. So far, we're up in the early session, but a lot of stuff to cover today.
yeah, there's a lot of things going on. And I I just think that as we're watching this, the story is I thought, you put the Goldilocks zone, so I altered the title to "This Porridge has gone bad." It's not a matter
Yeah.
of this is hot, this is too cold. It's just gone bad. It's turned. That
Yeah.
remember the old song "Peas porridge hot, peas porridge cold, peas porridge in the pot, 9 days old." It's food poisoning at this point. This is
it's it's
it is
rancid, baby.
it is rancid. It is turned. It is no one wants it. There's no one that's going to say, "Yeah, I'm going to go ahead and have myself a big scoop of this porridge." And I think your idea or your comment was that there's the Goldilocks zone is in danger. I just think that there's no chance. I just don't see that there's any too hot, too cold. It's gone bad. I Do you see any out based off the information that we've seen this last 2-3 months, really, not just over the last couple of weeks? Is there an out to the Fed? Do they have a way to manage their way through this based off what we've seen?
Yeah. So Jackson Hole, you have these monetary, leaders across the world kind of meet, talk policy, and everyone's awaiting Jay Powell's statement today, who's chairman of the Federal Reserve. And what are we going to do? Oftentimes they'll give some significant policy guidance at times, like Operation Twist way back when. But other times they don't. Nobody's really expecting a lot from Powell today in terms of policy. They're going to read his body language. Is his shoulder? It doesn't look like he's lying, telling the truth. But the problem is, it's always the Fed conundrum, right? They're always in the pickle. They're always painted in the corner because when you're an inflationist, when you print money ad infinitum, the reality is you're not serving the people. You're serving those that are the top, the upper crust, and that's where this creates wealth gaps and et cetera. So the reality is they're trying to walk the line of inflation while trying to give the accommodation that the market wants. And so there's nothing he can really do. But clearly, I think the market's leaning towards more cuts rather than less. But the problem is if they lean towards 50 basis points or a 0.5% in the next meeting, now all of a sudden we're saying the market or the economy may be in recession, which the jobs numbers certainly indicate. Or they only lean towards a quarter point. Oh, what's wrong with you? Aren't you taking it seriously? Inflation's coming in. So therefore, you should be cutting aggressively. So there's not really a statement out there, but people are going to read the body language. People are going to look whether there's eyes twitching. They're looking for their tells. But at the end of the day, they're going to be a failure. They always have been and always will.
Yeah, well, when you say the body language, I'm expecting him to do the don't hit me kind of body language because
How's eye twitches when he going 50.
I think that's normal for him now, right?
It's stupid, right? I'm like, but this is what we've become, right?
Well, is
The
what
jobs
is the study
revisions, people
when
are calling up the give me the
they measure
number.
someone's head? What's that?
Yeah.
Where they measure
The
the size of the head?
phrenologist.
Yeah, for now,
Yeah.
it's almost like we're getting to that level. Now, I agree. There's
We need
some
a
certainly.
JDAR, right? It's a radar for Jay Powell.
Well, you have to assume that this is not the World Series World Poker Series. We're not trying to find out whether he's really bluffing or not. I think there's absolutely a place for body language reading if you're at the poker table. He's
Right.
not coming out here and saying, "I'm going to try to trick you of what's really going on." It's that he doesn't know what to do.
But
In fact,
isn't this just a representative of just how, when you think about central planning in general, right? They have no clue what to do. You don't know what to set prices. You don't know the quantity. In this case, we're talking about monopoly power given to a private bank to set monetary policy and the price of money. And they don't know what they're doing, right? I mean, they're always boxed in a corner. They're providing accommodation to serve the upper crust of this. They're creating massive wealth gaps globally. And so the reality is they don't know what they're doing. They don't know what interest rates should be set at. They don't know if we're in a recession or not, right? They've never forecast recession. They've never done anything really that is leading, right? Because they
yeah,
don't know. And
yeah.
this is the
And
problem, right? When you put faith in 12 people to make decisions, it comes out irrational and you come out with rancid porridge.
well, I think you're the comment that they never try to forecast recession. They will always say, we were in a recession,
Right. A
but
year
now we're
later.
coming out of it.
Yeah,
So
right.
just so you know, we're coming out of it now. They will always wait till they can claim that they're coming out of the recession before they're going to ever claim that it was a recession, past tense. Not that,
Oh,
hey, we're heading into one right now,
yeah.
or
Yeah, they'll
next
never tell you
quarter will
we're
be
in
the
one,
second one.
right?
Yeah.
But
Yeah.
the twos and tens, it's right there. We're about to uninvert on the 2 and 10, which is recessionary. It's because they're expecting rate cuts.
Yeah. And I did think this was interesting. People have talked about
Thanks,
this
Neil.
92.
Come
This
on, Brandon.
92.
Tells you. I
Tell
know.
us how it really is. So 92% that we had a 1-year rate cut in September. And you say, well, that lowered. You got to remember it didn't lower because we were claiming that there's no change. It actually pushed more to that next cut. So it
Yeah.
went from 1 to a little bit more higher probability of 1.5. We did come way down on this as far as the ZQ. I was measuring this and talked about it in my video yesterday, or in my main room yesterday. We went from 5 cuts that were being priced in as far as the ZQ futures. And as we look out to December now, we're really putting most of them in this 1, 2, 3 cuts where it's, what is that, 100% chance for 3 cuts, and about 70% chance of 4 cuts, about 80% chance of 5 cuts. So, I mean, it's significant. It is still very, very significant, but we were locked back then. We're a little bit less so on the
Yeah.
5 cuts, but this is significant. And you can see that we shifted here as well, that we're up here, and then we've shifted the bulk down here. So we went from 2 to 3 to 4 to 5 at this point. And
If the
it's pretty
economy
bad.
is so great, what's the urgency, right?
Exactly. If the economy is great, you really don't want to be lowering rates because then inflation is a bigger problem.
Yeah. I read an
So
article saying yesterday, some analyst was saying that, well, if Trump's elected, they're only going to get to 4.5% because of inflation. Well, what we're talking about then is, are we talking more growth? I'm like, it was kind of interesting making this assumption, but yeah, I mean, but if we're slumping right now, then if we're in recession, which we're talking jobs right now, which would potentially indicate, right, because of the massive revisions we saw, negative revisions, then that explains why they're looking to cut, 3/4, 1% by December.
yeah, and then one of the other things, we brought this up. I mean, we brought this to all of you how many weeks ago? We kept saying you cannot have weekly unemployment claims trending up 250,
Yeah.
300,000 job losses week over week over week and tell me that we're seeing that we have job growth. And
Yeah.
we also highlighted that every time we have the monthly report, the revisions are 80% of the time down, lower. So now they say, well, there's almost a million jobs that aren't really there.
Yeah.
That will push us past 5.5 or 4.5 to 5% unemployment. And historically speaking, that's not bad.
Right.
5% is manageable. But the problem is when you trend like that, what happens when you hit 8? What happens if you
Well,
hit 10?
and then the unemployment report, I mean, it's household numbers, right? Households are responding. Fewer households are responding, but it's also like, okay, did you sell something for $600 on eBay? Right? I'm like, there's an element of like, if you generate very little cash, you are technically employed
Mm-hmm.
from side jobs. And so, are we talking about quality jobs that are producing a significant income to achieve that very low unemployment rate? Or is it really just kind of the gig economy? And okay, I made $1,000 as a clown for birthday parties. I got to report it, so technically I'm employed. And we'll see. But again, that revision of 818,000 jobs lower for the last year, that was rather significant. I think people were kind of sitting back, and especially the way it was released. I mean, the way it wasn't released, rather. People are calling on the phone and getting the number, and we're waiting to refresh the page. Again, it was a really interesting experience, right? And it just shows the level of incompetence when you
it was a leak, but not a leak.
Produce these numbers.
Yeah, it was a leak, but not a leak.
Yeah,
it's flat out.
You call, you get the number, but if you hit refresh on the page, you don't.
Exactly. So the information was available. We weren't hiding anything, and it wasn't a leak. And sure enough, it was bad news. Hey, I don't know if you saw this. This was not on my agenda. Since we're here, I thought this was really interesting. I talked about this in yesterday's video. If you go back on existing home sales, which is, I've always argued this is the number one thing that how the consumer refinances out of debt when we're at these record highs. If we can borrow, we borrow money from our house, we refinance, and we stay in there. But the question is, how much room do we have to breathe? And I've always used the existing home sales as something that you could see how healthy the home economy is. And if we go back here, post housing crisis, we were at 4.49 million home sales. Do you see the problem already?
Yeah, 3.9.
Yeah, and the worst it got was all the way back here, and I think this is probably bad data, but we'll still go with it. August 2010, banks weren't really lending full force yet, but 3.83. So there's our lowest number, 3.83 during a housing crisis.
Right.
And we're at 3.95.
Yeah. And we've been, after that surge in 2020, 2021, I mean, was ZERP, we had very, very low rates. And Lowe's came out and said, look, we're seeing some slowness, and the stock really wasn't affected a lot. I'm expecting to pull back, retest lows again, but Lowe's came out with their earnings and had a kind of a little, assessing the circumstance, not good.
Yeah, and I think it's really fascinating to me to see the VIX in conjunction with that, because we have all this data that's saying, hey, this is not good. This is really bad news. We had our huge spike to 65.73, all the way back down. What do you think about this, as you called it, the round trip?
Yeah, so when you think about it, I'm like, how often does the VIX go to 65, number one? And how often does it go from 65 to like 14 something? Never, right? I mean, these are isolated circumstances that just not only just the spike, but the pulling back, it never happens like this. Usually you stall around 20, and it takes a little while for it to get down there. We round tripped. And so when you think about the drop and the pop in the markets, if you bring up the S&P 500, I mean, we've basically gotten back to the prior highs that we just achieved prior to the sell-off there. And look, I mean, if you measure this rally, this 10% rally off the lows, and you look at it in gold terms, the market's only at 3%. So what happened is, the off the lows, these expectations that the S&P, that Powell's going to cut rates, weakening the dollar, this led to the more significant rally in the market. And so as a function, the market in real terms might only be up like 3+%. When you account for the weakness in the dollar, the change in Fed expectations created, we're up 10%. So all we need is for the dollar to begin to strengthen. In and of itself, the market has significant downside. And then if you start to lose any degree of value, right, then all of a sudden the market just doubly gets hit, loss of value and dollar strength. That's what happens if you bring up DXJ, for example. That was a double whammy that hit Japan, right? Yen strengthening and coupled with weakness in the market, the stock market, loss of value. DXJ is in yen terms, there's a big decline. And so right now, as you look at EWJ, I mean, we're kind of hitting resistance, market at resistance. Yeah. So we kind of talked last week. It was a good time to hedge. I think we're right there still.
Yeah, and I just pulled up the NAS or the Nikkei directly, but I'm just trying to keep up with your phraseology.
I know. But I like DXJ because it kind of, but EWJ, is priced in dollars. And, so again, I'm like, if you look at DXJ, you look at it in yen terms, the recovery is not quite as strong, right? So it's kind of like we're having, if you look at the market in gold terms, the recovery off the lows aren't as strong. But when you pair in dollar weakness, it pushes the S&P a little faster or higher. And so there's a lot of fluff right now underneath this high. So I'm expecting us to see a pullback. And I think the volatility markets, that reversal in the VIX, suggests we may have a 5 to 10% pullback in the next coming weeks.
Well, one of the things that I also was looking at, I'm a big believer in widening patterns, just like your VIX is a V upside down V reversal. Anytime you get a widening pattern, whether it's the day or a longer time period where you clear highs and lows, not only is that an opportunity, but it's also a major warning. If you look through and say, where did we get widening candles? Usually there's more than double the follow through from the prior. So you talk about single candles, you see it something like this. And so what I'm looking at is you have this widening pattern and you doubled the previous move. Yeah. And then you created this pattern, which is a widening pattern too, because it made a higher high, lower low, and you doubled that. So my question is this going to double, which means going into it, we're just talking about it pull back into here, or are we talking about this? And if we're talking about this and we double this, I think it gives us a potential to 10% to the upside, just technically speaking.
Yeah.
But more likely, we return all the way down here and do a 10% drop, which means we're talking 20% correction.
So I look at kind of 3-month to 1-month volatility ratio that hit 1.2. So meaning that 3-month volatility is 20% higher. Well, not now, but as of last Friday, 20% higher than the 30-day volatility. Skew is ticking up right now. And so what's happening is that hedging activity is accelerating, and we're seeing expectations of significantly higher volatility in the near future. So now that signal normally means a 5 to 10% pullback off of highs. And so that only get us halfway down the most recent run. So we could maybe pull back halfway and then run again, right? But again, I'm expecting we'll probably have a chance of retesting lows. So skew went up to 154. Anything north of 130 is high. So when you start to see it ratchet up like that, it means what? Institutions are hedging. They're buying puts, they're selling calls. They're selling more calls than put. They're buying puts, but they're increasing those hedges going into this rally, preparing for a market correction. And again, correction 5 to 10%. So that's what I'm looking at right now off of the highs. There's a very similar dynamic going back to March 21st, where we hit a similar dynamic. It was about a 5-6% pullback. So I'm expecting that minimum in the coming weeks here. But again, we may form a higher low out of this and then rally. But again, I think there's a lot of risks right now that the market may see more downside.
Yeah, and you know what, I find it humorous. Why can't we just get the best of both worlds? High inflation and massive job losses. That can happen. Don't you worry. That's don't you worry. That may happen. And Doji says vanity has its price. As we're looking at all these moves in the markets, we're talking about the expectations. Do we think that the Federal Reserve is trying to protect the incumbent? I don't necessarily think it's a protection of the incumbent. I think they try not to do anything drastic in an election year. I know maybe Brandon will have a different opinion. That's why I'm stepping in and talking first. That
every president wants low rates.
Yeah.
Right.
We want low rates.
This is where there's bipartisan agreement in wanting cheap money, no matter who's in office. And Bush complained. Bush 1 complained about the Fed, kind of screwing him over. But I haven't seen it really since, right? I'm like, so the Fed they want to go to accommodative, right? They're beholden to the bigger interests.
Yep. They're always going to be doing that. I'm not going to take a ton of time on the earnings things. So I'm going to jump down if we can, just because I'm looking at our time here as we're watching this. We talked about the VIX roundup. The big thing you already talked about, the body language, the tone. I talked about the two-sided risk. What I want to talk about really quickly is bonds and the Bitcoin breakdown. And we can highlight some of the earnings, but realistically, everybody's surprised to us here. But they're TJ Maxx, Ross, Dollar Tree. And so to me, these are the substitute, the cheap stocks, the ones that do well in recession.
Yeah.
So, and we can go into more details there, but as far as bonds and Bitcoin, and I'm going to throw gold in there as part of this conversation, since I know you like to put gold pretty much permanently on your bullish watch list. As we're looking at this, do you think that with the expectation of maybe 1 instead of 2 or 2 instead of 3, as far as rate cuts, are you betting on bonds long, short, consolidate? Because I mean, we're in consolidation right now, but that's just for the month of August. But that's a lot of consolidation. What's
Yeah.
your anticipation in bonds?
Well, I think bigger picture, the Fed's going to go to ZERP again, right? We're
Mhm.
going to hit recession. The Fed wants to go to zero interest rate policy. So I think longer term, the risk and reward in bonds, long-term bonds, right? Like
Mhm.
TLT, for example. I mean, I think the risk and reward is pretty favorable at this point if the Fed goes to ZERP. Even if they don't, you can buy call spreads in here, 125, 130, 130, 125, going out a year plus, right? You can do that pretty cheaply because of the skew. So I like I like TLT from a longer term perspective. I think we're just getting to the point if we're really starting to cut rates, TLT really has a chance to move. But in the near term, though, we are near resistance. So we could see a pullback here, which would generally negatively affect gold. But again, gold broke out this week, kind of broke that kind of consolidation, ascending triangle, symmetrical triangle. But we're kind of testing that old resistance now as support at around that 229 area. So I kind of like gold for a bounce here, unless we're really going into recession. So again, I got gold and energy, Exxon, for example. It's all based on the idea that if the dollar weakens, these should perform relatively well.
Yeah, and Exxon, pulled back aggressively, but I don't think
And
it
that
broke the
drop
trend.
was on good data. I mean,
Yeah.
well, before the data, but I mean, oil dropped on the Wednesday, 4.6 million barrel draw, I believe. We're in backwardation. Oil supplies are really low. We're going into hurricane season. But the positioning is fairly short in oil right now. That could flip, and that's what I'm expecting.
Yeah, and so let's go throw crude on there before we leave that idea on ExxonMobil. ExxonMobil, I see it as a support level, and there may be an opportunity to buy there from a technical, despite the reaction to bad news. And I'm looking at this and saying that's a pretty good bounce already
Yeah.
from a technical perspective. We already found the base, and we cleared the high of that little base right through there too. So I actually like energy long again. I think it's already bounced enough on crude that we'll probably see that start pricing back into those individual stocks. This is an area that I get all passionate about because I think this is stupid. But
But
do
that's why
you
it's
think?
money. It's worthless.
There you go. It's worthless money. Bitcoin. Is this the bounce or is it the break? Is it the failure? What consolidation?
This is where Bitcoin, I mean, where it misses some of the standards is a store of value, right? It trades more like a tech stock than it does gold. There's times where it was really correlated with gold. It's broken off a little bit with that surge we saw in February and March, big squeeze the top. So yeah, I don't know. I mean, look, I'm not sure we're really moving the dollar. I think we're moving with the speculative beta interest, right? So
Yep.
if we see a high beta rotation, Bitcoin has a chance to move. But I think right now, I think risk off generally for the market, which means Bitcoin may sag towards its lows at 50,000 again.
For those of you that don't follow the beta conversation, just really quickly, that means it moves based on risk. If we're
Yeah.
not afraid and it's low risk, Bitcoin's to the moon. If we're scared, we're nervous, we're uncertain, Bitcoin does not rally. In fact, it can sell off because it's a risk asset. We're betting on it based off of risk.
Yeah.
So we're coming down to the wire here. We got about 10, 15 minutes here. So let's go through a couple of your bulls and bears through this list. We'll get some of you as the viewers, some of the ones that you want to look at as well. Feel free to type those into the Wise Hub or the YouTube or the main page, and we will try to get to those. But I'm going to go through our list here kind of quick.
Let's start with some years, Blake.
Well, yeah. So I already brought these up. The reason why I don't get I'm not too worried about getting to all of mine, is because a lot of these that make my list on the previous day. I'm still long utilities. I just don't see any way not to be long utilities. It's a substitute for fixed income. It's also a safety play. It's a defensive sector. And so things like WEC, Wisconsin Energy, broke through the highs. We gapped up, traded at this massive base, broke through the 52-week high, and we just kept on trucking. In fact,
Yeah.
this was actually the higher close. And I like to use closes more than I just care about the high shadows. This is the highest close back here at 90, and we've continued to move higher. Now, it's probably my biggest mover as far as the utilities go, but I do actually like the rounded bottom here, or the little bounce here on AEP, and I'd still stick to the idea of utilities in general, XLU.
So earlier in the week, there was some we're just looking at the option activity. There's some significant bearish option activity. So again,
on
we'll
XLU,
see. I mean,
really?
During my session, we kind of took just a kind of an in-out spread type trade for looking for this to kind of test the 72 area on XLU. But you're right. I mean, utilities have been strong. If bonds rally, yields drop. It's in the defensive rotation in utilities. So again, we had, about a month ago, we had a signal based upon relative strength in utilities to sell the S&P by XLU. And that regime's still in, right? It's not the time to sell XLU. But if you're taking a trade, sometimes you see near-term extremes and you play the downside. But overall, the theme is to be long utilities over the S&P 500. And it's been that
And
way
I'm
for over a
actually
month.
looking for this melt here on the pullback to repeat. So I'm not looking for the moon, but I'm looking for about 80. Another 5% higher while collecting a dividend.
Yeah.
So
I saw a similar signal at the beginning of March, and it ended right at the end of May. So we had that rotation to utilities beginning of March, rotated out the end of May. And again, XLU was up while the S&P was floundering a little bit.
yeah.
Kind of the same scenario here. The last month, utilities have outperformed. So it's still reasonably long utilities, but sometimes you could trade the opposite way too.
Yeah, and you already mentioned XOM on yours. I'm rotating back there. The support level bounce, the holding up here, crude climbing higher.
And PayPal was one I brought up last week as well, last couple weeks really, but it finally broke out. There was a lot of option activity leading into that, and but again, we're kind of hovering above that resistance area at about 68.
What's your target?
So,
well,
if we look at the range, I mean, we're talking with 57 to 68. It's about 11 points, right, off the break. So you're looking close to $80 on PayPal. And again, this company is one that the earnings themselves have been good, the valuation's strong, and it's a multi-year breakout here.
And you left gold on. You keep gold in our list here.
So for gold, again, we had that little triangle breakout this week, breaking about the 229 area. It was about a 217, about a 15-point range, so 245. But again, the threat to gold, the threat to oil is a stronger dollar, weaker economy, and so we'll see if that grabs it. But again, Powell's probably expect to be more dovish today. This could really cause gold to bounce here, and oil. No, oil's already bouncing.
All right. Well, and again, I'm going to skip through mine pretty quickly. If you want to see a little bit more detail, go back and watch Thursday afternoon video. I'm liking Texas Instruments rolling over here at the top. Huge engulfing candle pushing back into the previous pattern. Micron rolling over, huge pattern in a downtrend. AMD similar to that on the way down. So I'm very bearish the tech sector, especially the chip makers, and I mean, we could throw TSM in there. The professor, I know he was looking at that one as well.
I mean, earlier in the week, there was some bullish. They were trying to push this part of the market.
Yeah,
and what you're seeing is they really failed yesterday, right? I'm like, there's a lot of option activity on the bullish side, and as we just broke, we didn't get the gamma squeeze higher.
Yeah, it just completely failed. And I mean, TSM was a follow through to the already failure. And it was at key levels. It's not just failing it and rolling back. It was failing after multiple days of failed attempts. And so then you had some increase in volume and a continuation lower.
Technology is the second worst performer on the week, sector-wise.
Yeah. You have an interesting one at uranium.
Yeah. this is what I've been kind of bearish on for about a month, but there's a lot of increased production in uranium. And so all of a sudden there's the threat of prices going down. And since we saw, I think it's Kazakhstan, they're like the biggest producer of uranium or the biggest miner of uranium in Kazakhstan. They're expanding production. The US is expanding production finally after many years. So again, so the problem, this is more of a supply thing, right? Too much of a good thing. Hey, we start to produce more, prices start to come down. And so URA is one I've been looking for the last week to break. We finally got a break from this flag, looking at retest of 23 at a minimum. But we kind of looked at a spread trade out of the money there on URA, but finally getting that break. But I've been kind of bearish in this area the last month as we've seen the news come out about increased production.
And then you went with Corning, GLW.
Yeah, so there was a huge trade yesterday on Corning. So bearish put option buying yesterday. It was over 20,000 contracts. I guess look at my spreadsheet here, but it was 25,000 contracts for the 27 SEP 40 puts. Most of it bought in one print. So again, it's a little early, but again, it's kind of dovetails with tech. This produces glass and stuff. I'm looking at a retest of 38 on Corning.
Okay, and let's do. We kind of mentioned EWJ, but let me throw lows in there. You mentioned this one as well.
Yeah, earnings were great. Yeah, the stock held up, but I think retesting 230. So this dovetails with XHB. Marlon's asked about XHB and XLV. Dovetails with it, right? We have home builders, we have Lowe's, we have Home Depot.
Yeah, I always like using ITB.
Yeah, ITB is a great one for that. Yeah, I think this whole space is ripe for a pullback from here.
ITB is a little bit more weighted into the home builders specific,
Yeah.
and less Sherwin-Williams and Home Depots and Lowe's. So less supplementary companies inside there.
We've had a decent rally here on light volume. I think this is a good time for this to kind of break lower, retest our lows at 105 on XHB, and like in out type spreads work well where you buy in the money puts out of the money or just out of the money and further out of the money. The pricing's good, the skews in your favor.
And you know, the EWJ, do you have a target for that one before I?
Well, I think again we're talking about the carry trade probably continuing to unwind here. I'm expecting yen strength. I don't know. What do you think about that, Blake, as far as yen?
I just think that any other shifts, they're going to continue to take out 25 years of negative interest rates. There's a lot more movement to adjust here, and I do think it could feed into an Asian contagion again. I do think it's absolutely. Look back to the late 90s and then see how you feel about the Asian economy and how that feeds into the world. So, you know, I would
66. I think would be good on EWJ. But again, this is one where you buy in the money, sell out of the money, or just bear like a 70, 68. I forget what the strike offerings are for this, but we looked at it yesterday.
CCJ is one. Cameco. Do you know anything about these guys? I don't.
They're a uranium producer.
Oh, they okay.
So they're probably the largest one, at least here. These are the biggest holdings in these uranium ETFs. Yeah, so CCJ's probably even a more efficient way to play URA, more liquidity in CCJ, more trade. But yeah, looking at retesting prior lows. We saw the option activity really flip early July for this space, and they try to kind of execute that breakout, but then just the supply concerns as more production is coming online, which may help the profitability if these companies start to produce more, but it also affects the prices. So,
yeah, you know, and that's I really like these ones. I've spent zero time looking at them. I think fascinating to see an actual economic supply demand situation.
Yeah.
it's like, hey, this is kind of cool.
I know
we get to see something normal, a normal economic.
That's the so it's like some people get on us because like, oh, you're bearish. No, it's not that I'm bearish. It's just like I just want some return to normalcy.
Yeah.
It's like I just want economics to matter. I want earnings to matter. I want revenues to matter, right? I hate the machinations of the Fed creating phantom value. It's just a price appreciation. It's not real value creation. Certainly there's been value creation in NVIDIA in these stocks, but just the goosing of these stocks and accelerating trends when they shouldn't be there just creates more risk.
Yeah, and I'm with you completely there. And not because I went to my degrees in economics and managerial finance, and so I want to see the things that I spent all my time learning still has value. But But it, yeah, it definitely has it. It's good to see. Yeah, yeah, this makes sense. If this happens, then this should happen. One of the comments was XLV and Pfizer. XLV's breakout to the 52-week highs. Again, I'm not big on the shadows. Was much more interested in the close above the previous highs here. It's almost finished out that price pattern, and so that's why I didn't put healthcare in my list yesterday or today. I'm not sure whether it's going to sustain that. And, things like Pfizer certainly rolling down. One of the comments was Pfizer. It's
Yeah.
rolling down through here. And to me, that's a sell signal to me. But whether it can get through this 2780, I'm not sure.
I
There's
think
a lot of traders here.
I think part of the story of the healthcare, if you bring up IBB, it's biotech, right? And Johnny's big on biotech and he goes over a lot. But biotech is a space, again, big run here over the last couple of weeks. Biotech's a space that has very, very high short interest among. So if you look at all the stocks in the market that have greater than 20% of the float shorted, meaning investors have sold the stock, they're going to buy it back later. These are this 2/3 of these stocks are biotechnology names. And so we've gotten the short squeeze off of our lows here the last 2 weeks, but the fundamentals of these companies mostly are not fantastic. A lot of them don't have revenue, right? There's no product. And so we just saw the rolling over yesterday and we saw some put activity come in at the high. And so again, I'm looking at IBB pull back towards 140, but watch out. If we see a continuation of the short squeeze, watch for that break of 150. We may see another very significant run like we saw in July.
Yep.
So we're
Well,
kind
on
of at a
that,
critical moment.
we've got to get out of the way for Don because the day is about to begin. So thank you, everybody. Thanks for participating. Thanks for sharing some of the symbols with me, Brandon. As always, thank you for your insight and providing me some hope that economics matter once again. Make economics great again. All right. Have a great day, everybody. Have a successful day. Thank you for joining us, and we'll talk to you again soon.
Have a great one, everyone. Thank you.